Okay, so today we're going to look at inventory, and I just want to go over just a little example of kind of what the whole idea behind it. And again, it's one of those things that's very simple. The idea is very simple, but the actual practice can be a little more difficult. And it is, okay, I got this little toy car, and let's say I bought this toy car for $5 and I'm selling it for $8. So I bought it for $5. I mean, let's say I'm in the toy business. I bought it for $5 and I'm selling it for $8. Okay. How much profit did I make on the car?
$3.
$3. Everybody knows it, right? You know, easy. Now in accounting, of course, we have our kind of our own way of doing things. And here's how this would look. Okay, so good pens. Here we go. So it's kind of like this. Pen here. So here's how this would look in accounting talk. The sales would be $8. The cost of the car I sold is $5. So this would be the cost of goods sold and our gross profit is 3. So this is what this would look like in kind of accounting terms. Now, everybody intuitively knows you made $3 on it, right? You paid $5, you sold it for $8, you made a profit of 3. Everybody knows that. But this is kind of putting it in the accounting terms. And oops, I don't want to do that. Hold on a second. Okay. Hi. Can't wait to figure out how to use these new computers. Now, so intuitively, you know that you made $3 on it. Now we put it into this kind of a jargon kind of thing because of we all kind of have to. It's kind of like a language, you know. We in English we call this a pen. It could be called something else, you know. It could be called what's it, you know. But as long as we all know what the name of it is, you know, we can communicate the, you know, if this is a pen, you know, what it is. Even though the name might be different in different languages, it will have a different name. But in those different languages, they'll agree on what it's called. So we have to do the same thing. So even though there may be different ways of describing it, we kind of put everything into a format of kind of being the same. And that's what this is. This is kind of the format that we're going to be using for this chapter. You know, the sales, whatever you sold it for, cost of goods, whatever it cost you. And gross profit is how much profit did you make on the thing? All right. So let's go ahead, and now I do want to share my screen. So if you pull up the chapter 6 handout, we'll start to go over this thing. Okay, so we have sales. I'll make sales green. And then we have inventory or cost of goods. So this is what things cost us that we have it to sell. This is how many things we sold. Now notice we didn't sell everything, right? We still have some stuff left over, which we'll talk about later. Okay, so total January sales were 160. Okay, so coming down here to calculate the sales, we have oops. I'm just gonna do it in caps. I guess that would be. You know, I'm not gonna do caps because I'll goof it up. Okay. So our sales for January. Oh yeah, man. Oh. So we sold 160 units. That's just this. And we sold each of them for that. So this will be our total sales. Whatever that is. Time for Mr. Calculator. 60 times 15. 2,400. So this is the amount of money that came in. Okay, now true or false? We made $2,400 of profit on this.
False.
False. We have to take into account that we paid for this inventory, so we have to look at the cost now. So these are the cost of goods. The inventory is the cost of goods, and making things worse. We have to know what the cost of the goods that we sold. So notice we didn't sell all of these. We only sold 160, and we have a total available is. Oops. So goods available is, what is that, 230? So we have 230 that we could have sold, but we didn't sell all of them. We sold 160 of them. So we are going to go to our cost of goods sold down here. And this will be for January. Let's put January. And we have units. And we have a cost. And over here, we'd have our total cost. Okay. So how many units did we sell?
160.
Yep.
60.
The cost will be exactly the units will be exactly the same. And the cost for each one was
15. Or 10, sorry.
Yep, 10. So these are the costs we have for each of those. Oops. So this will be the cost. That will equal 1,600, I think. And so this is the cost of what went out, right? This is what left the place. And notice that these units are the same. These are the sales, and these are the units. So these are what we sold. Down here says, okay, well, what did those 160 units cost you? So they cost 1,600. So our gross profit will look like this. We have our sales is 2,400. Oops. Our cost of goods sold $1,600. And now, because this is a cost, I'm gonna put a negative in front. You can just leave it like it is if you want, just as long as you subtract it. I'll bold both of those. And so this will give us our gross profit. $800. Use 800. So notice, this is really the same as this. I mean, there's more units, but it's sold one car here. But this is really the same. There should be an there. Sold a toy car. But anyway, this would be this is the same idea though, is this. Instead of selling one unit, we sold 160 units. Any question on that?
No.
Okay. So coming up here, these total goods that are available. The question is, well, what's in our ending inventory? What is left over? What's left over in our inventory? Well, okay. We have to look at basically the goods that were not sold. So we have to do it from right here. So we sold 160 units. Uh, 230 minus 160 is 70, I think. I'm having a very good day, so I'm going to pull up the calculator. So 230 minus 160, yeah. So our ending inventory, in other words, the unsold units, was 70. Color on that. Okay, so this is going to be our ending inventory. Unsold units was 70. And that's one thing at the to keep in mind at the end of the period. The units that are available, they're either sold or they're not sold. If they're sold, they go in cost of goods sold. If they're not sold, they're in the ending inventory. We still have them. You know, we can still sell them. So the available units, the 230 units, those either get, some of those will be sold and some will be unsold. It's possible you sell all of them, you know, sell down to the bare shelves. I used to say that was theoretical until COVID came around. I'm sure you guys all went to the shock that I did when you go into the stores and half the shelves were completely empty. It doesn't usually happen that way, but it can. So it is possible to sell all of them. And then your units available and your cost of goods sold would be the same. You know, the same units. But yeah, so these are the ones that are unsold. Okay, so coming down here. And so this would be for January, I guess. In the end of January. We'll have units. We'll have cost. And we'll have the total inventory. Okay, so we had 70 units that were not sold. And the cost of them was what? What do we pay for those units?
$10.
Yep. $700. So this would be what would be left in our ending inventory. Oops. And not to put too fine a point on it, so this would be on our income statement here. And down here, this would be on our balance sheet. The ending inventory, this would be an asset. So we still have stuff to sell. By the way, I just want to point out something here, and then this ending inventory at the end of January, the 70 units, that will be the beginning inventory in February, right? Because at the end of January, we still have 70 units that we didn't sell. February 1st, we open the doors up, we have 70 units available. Now we might purchase and sell some, throughout the day or whatever, but this is what's going to be our beginning inventory for the following month. So the ending inventory 1 month becomes the beginning of the following month, and so on and so forth. So going up here, the beginning inventory, this is left over from December, whatever the year was, December 31st of whatever the year was before. And, those purchases and so on, and some things were sold, and kind of the way it goes. So anyway, what's on that thing? Getting used to the terminology, especially cost of goods sold, is kind of a funny term, but as we use. Okay. I think I'll be quiet for a little bit and see if you can figure out the second one. Same as the first one. This is our sales. These are the units we sold. And by the way, just so you know, the sales are the really easy part when it comes to this inventory stuff. Whatever you sold them for, when you gave them the products, whatever they were, whatever they gave you back, that's the sale. So.
Hey, Professor, just so you know, you're actually muted. I don't know if you meant to be muted.
Yeah, I meant to mute just because my typing is probably annoying.
Oh, okay.
But yeah, it's I'm trying to get a little more savvy at this, but yeah. Okay, so ending inventory is
40 units.
cost what 20. Oops. Equal what 800.
Mm-hmm.
They don't need the total in there. It's the ending inventory. So anyway, so yeah, so this would be so at the end of January, we would have, I'm gonna pull this whole thing. And so this being an asset, we still have it on books, we can still sell these. The ending inventory would be 800. So this would be on the income statement. Showing a profit of that. This would be in our ending inventory. Question on that? Okay, let's go to page 3, and this one is where it starts getting tricky. On page 3, you'll notice, oops. Something that is absolutely common in business. Prices change. But here's the thing. We sold 45 units. Okay, the question is, which units did we sell? It's going to make a difference. It's going to make a difference in our how profitable we are. And it's going to make a difference in our ending inventory. So you run into this problem of, what if the prices aren't the same? If the prices are the same, it doesn't really matter. But if the prices change, and we all know the world that they usually do at some point, anyways, it matters which one of these, which units up here were the ones that we sold, or that we're going to assume were sold. Oops. And again, the selling price is easy. It's not, they took the item, whatever they handed you back, that was the sale. Whatever it was, in this case, $40, but it could be whatever it is. So the question is the cost, and that's always the question. And one of the hardest things is to determine what the cost is. It sounds like it should be easy. Well, just what does it cost? People say it all the time. Well, in this case, it matters which one you're looking at. Oops. So this is kind of the problem. Now, let's do the easy one. Let's do the sales, and we'll worry about the cost here in a second. So sales is exactly the same. Sales is easy peasy. Okay, so 45 units. $3 each. Some number. Calculator cam. Okay, so the total sales are 1,800. Okay, so that's the easy part. Okay, now this is the method that we're going to use is this. So first in, first out, commonly called FIFO method. Now, when we say out, what we really mean here is first in, first sold. So when we say out, really that means first in, first. I'm making a mess out of this. Let me do it differently. Kind of what that. So the first ones in were the first ones that were sold. This out really means sold. So whenever you see, so first in, first out, we also have a last in, first out. The out means that it left the place, that it was sold. So the out is really, you really think about this as first in, first sold. So the first ones that we had in our stock are the first ones we sold, which is probably the way most businesses work, right? I mean, if you're a grocery store, you get milk in, you sell the milk before you put the the later milk in, whatever you sell. So you are always selling the first ones you got in are the ones you're always selling. And that's probably the way most businesses and the kind of the flow is. That the first ones you got in are probably the first ones you sold. Not only that, you'll notice something that it doesn't work on this well. I gotta use a different one. Who made this lousy thing? No, but if you had items that if you're selling something on January 1st, obviously, they can't come from here, right? I mean, if you were selling something on January 1st, it couldn't come from a purchase you made on January 10th. They haven't arrived. It'll be 9 days before they show up. So anyway, so usually the first ones in are the first ones you sold. Okay, so first in, first sold. Looking at our inventory. Which ones were the first ones in? The beginning inventory on 1/1 or the purchase of inventory on January 10th?
Beginning.
Beginning, good. So these are the first ones that are in. This is the first place we're going to go. So the first place we're going to say, okay, we sold these 45 units. They came from this beginning inventory of 80. Okay, so coming down here, now this is where it gets a little bit tricky. Okay, so we have, we sold 45 units. So we're gonna go to the first ones in. Now, are we gonna take all 80 for the cost?
No, 45.
45, good. This part hasn't changed. Okay, so we gotta go to the layers and see what we can get. Okay, so we'll take the beginning inventory on 1-1. And there's 80 in there. We only need 45, so we can take all 45 out of that first layer, right? Okay, so let's try that again. Now this is gonna look a little bit silly. It'll come into play later on, but we need the cost for, we don't need the cost for any more. We got all of them from that layer that we need. So we're gonna take all of those 45 from that first layer. And this will be cost. Oops. Sorry, guys. 5 or 6 minutes, I'll be done with it. Okay, here we go. So it's 22 was the cost. Uh, 45 times 22 is 990. Okay, now notice, let's go back, let's go up here for, let me see if there's any questions on these. So any questions down here for this one?
No.
We insert a, so this, yeah, so the first one's in 22. Okay, so coming down here to our gross profit, we would have sales. So sales were 1,800. Our cost of goods sold. $990. So our gross profit. $810. So this will be how much profit they made out of the place. assuming that the first ones were the first ones sold. Okay, now, when it comes to ending inventory, we have a little bit of a problem. Because of this beginning inventory, we sold some of those. And notice we sold them from the beginning inventory, not the inventory on 110 or not the total number of units, but we sold them from that layer, that first layer of inventory. Okay, so of these 80 units, we sold 45. So the beginning inventory no longer has 80. Beginning inventory has 35. Now, so we no longer have this because we sold 45 of the units. So this is what we have left. We have 35 from the beginning inventory left, 35 units. And we have 50 units still left of the purchase. We didn't sell any of those. So those are left. So this is our ending inventory. This was what was not sold. So we sold 45 of these. I'm gonna unhighlight that. Oops, that's not how you unhighlight things. So we're really left with this for our ending inventory. Our beginning inventory was, it will still be the 35 and one. The purchase of 110 will still be there, 50. So going down here to the ending inventory, I'm going to copy this down here. just occurred to me that I'm going to need this. Okay, so I'm just going to copy this down here for now. Can I? I just want to get this on the same screen. What I'm trying to do here. Okay, so ignore this one. Ignore this thing. Okay, so our ending inventory. We still have from 1-1, we still have units. Um, 35, cost of 22. And from this, okay, so 35 times 22 equals some number. 70 to be exact. And 50 times 25, should be able to do my head at 1250. I better. Okay, so. Ooh. It's not going to cooperate here. Okay. So that's it. Those are the ending inventories for this. So this would be. So is the ending inventory, in other words, it was not sold? 1250 plus 770. 2000. And so this is, this is basically what was not sold. Starting in the next period, we would have these two layers still sitting there. These would be the first two layers. This would still be the first ones in. This would become the new first in for the next period. Oops. And after those 35 are sold, then you go into the 50 and so on and so forth. So notice though, which ones you pick, well, it'll have an impact on your ending inventory. It'll also have an impact on your income. It'll have an impact on your profit. And this is why, you think, okay, well, how much money did you make? We make it simple. How much did it? Just actually what it was, it's really hard. It depends on which one you're talking about as far as which ones you sold. So, yeah, so this is how we kind of do it. Okay, we're going to stop here. I don't think we can do the next one in time. Okay, so again, kind of a little bit of a kooky thing, but it's basically what is left, what's unsold here is what we're going to do down here. And again, if this looks strange, it should, because probably the first time you're seeing it. Yeah, and so this is, again, first in, first out, something called FIFO. So when you see FIFO, if any of you are in programming, you know, first in, first out, and data coming through, you talk about first data in, first data out, same thing. It's the exact same idea. I mean, you don't solve the data, but the first data in the stream is the first data that leaves the stream. Okay. Any questions? Okay, well, we'll stop there. We're obviously going to take more time doing this next class. So no, that's it. And I'll hopefully post the correct video today. I'll double check to make sure I'm putting the right one in. Any questions on any of this? Okay, and again, it really is. It really is just this, but it's a little bit tricky because we have different costs. The cost goods sold is the tricky part here. This is This is the difficult one. You know, the cost of goods sold is the hard. Sales are easy, you know, and whatever, you know, subtract out, but the cost of goods sold is the hard part. When I was in auditing, and who knows why this happened, but I became an inventory expert guy because I think the first inventory is really difficult for a lot of places to audit. Why? Because you got a bunch of stuff coming in, and the same day you have a bunch of stuff going out. It's a moving target. So a lot of times there's a lot to do. So if you're the new person on a job, they give you, okay, this person's overwhelmed with inventory, they give it to you. But anyway, again, who knows why I became the inventory person. So on audits after my first one, he knows how to do inventory. You put him on inventory. So I became inventory guy. But anyway, and again, I had no particular interest in inventory, but at the same time, it's it can be difficult, because it is a moving target. Stuff coming in and leaving every day. Think about a grocery store; they get deliveries every day, they make sales every day. It's difficult to kind of figure out where you're at. So, anyway, any questions on this so far? I know it's a little wacky. We're going to spend more time on it, but questions? Don't
No.
ask any question. Throw a shoe at you if you ask a question. Okay, so I will see you guys on Thursday, and we'll pick up on this. And I will again make every effort not to put the wrong video up today. And if there any other of them are incorrect, let me know. I certainly don't. Again, it's hard enough if the stuff is there, and if it's not there, then it's even worse. So, okay, guys. Well, I will see you on Thursday.
Thank you. Have a good day.
Thanks, guys.
Have a good day.
I will.
Thank you. Thank
Thank
you,
you.
bye.